But again, if you can go back maybe to 2010 as that was happening, you mentioned in one of your articles that you were seeing physical tightness in the market. I was wondering if you could describe what that actually means and looks like.
Sure. It's important to keep in mind that silver is a very unique commodity in that it's both a industrial commodity and it's a investment asset. And the physical shortage that was started to develop in the fall of 2010 as we were hitting and moving above the $20 mark for the first time again since both 2008 and before that 1980. There's a funny thing about investments in that people collectively buy things that are going up. You know, we go to Kmart, we go to Walmart. You know, you're looking for a sale, a bargain. When it comes to investments, that rule is thrown out and reversed, and people buy only when the price of something is going up, whether it's stocks, bonds, real estate, silver. It doesn't really make, there's no exceptions to it. So back in the fall of 2010, when silver started to go up, it started to attract not greater industrial demand. That doesn't change that much, okay, right, from day to day or even from year to year. What starts to change is investment demand, and the price is going up. People collectively buy. I know we're supposed to buy low and sell high, but that's in the books. What we do in real life is the opposite of that. We buy as things go up, and we sell as things go down. So as silver prices were starting to go up in the fall of 2010 to new highs, it generated investment demand. And because we had by that time established the big silver ETF, SLV, which came about maybe 4 or 5 years prior to that, a lot of demand, it's an easy way to buy silver, so a lot of demand, investment demand, started coming into SLV. And as a result of that paper buying of shares of SLV, the way the trust works is that all new buying has to be satisfied with physical metal deposited to match the new shares created. And something like 60 million ounces was bought collectively in SLV in a few months period of time prior to the price peak. And I contend that it was that buying of 60 million ounces and the deposit, the physical deposit of the 60 million ounces, that contributed greatly to the physical silver shortage. At the same time, Sprott was coming out with its physical silver ETF, adding more pressure and demand for physical silver. So the physical shortage that started to develop in 2010 was created by investment demand, okay? Right. I would say that 90% of the people that were buying the shares of either SLV or the Sprott Trust or any of the others, I think ZKB also came out at the same time, basically, they didn't even know what was going on. They weren't aware that their buying of shares was resulting in physical silver being taken off the market and a physical shortage created. It was just the way it was. It's just the way it happened. And that fed on itself. And that's why we went to near $50 in April of the following year, 2011.